Ever feel like, the market's playing a game of like red light, green light with you? But it changes the rules without telling you.
Yeah, that's the thing about market reversals, right? They can really shake your confidence and leave you wondering, like, did I miss a memo? Did something happen that I didn't know about?
Right. Well, good news, listeners. Today, we're not just reading the memo.
Yeah.
We're writing it ourselves.
That's right.
Welcome to Finance Insider.
Yeah.
The show where we break down complex financial topics into actionable insights.
Absolutely.
I'm Big Joe.
And I'm Mary. And today,
That's right.
we are your guides to spotting those tricky market reversals
Oh, yeah.
before they wipe out your gains.
Before they wipe out those gains.
That's right.
Now, think of it like this.
Okay.
You wouldn't jump in the ocean without checking for rip currents, right?
No, you wouldn't.
Same goes for the market.
Exactly.
We're diving deep into the signals.
Uh-huh.
That can tell you if a price dip is just a temporary pullback or the start of a full-blown downward spiral.
Yep.
And we're using some awesome insights from Baby Pips.
Love Baby Pips.
They're the Forex experts.
They are.
Who can explain anything in plain English.
Plain English, that's right. If you want to learn about Forex, that's the place to go.
Absolutely. And they've got a knack for making those complex concepts relatable.
They do.
You know, they actually compare spotting reversals to noticing when someone's enthusiasm for an idea starts to fade.
Oh, yeah. It's a really good analogy.
Think about a time you pitched an idea
Yeah.
and you can just tell it wasn't landing.
I have been there.
Oh man, have I been there.
Yeah.
You start to see those polite nods and forced smiles. And, it's time to move on.
Yep.
Maybe regroup.
Maybe you try again later.
Absolutely, or just scrap it completely.
Or scrap it completely.
Yep.
Baby Pips says that same energy shift happens in the market.
Interesting.
Yeah.
Okay, so how do we, as investors, pick up on those fading smiles in the charts and graphs?
Well, just like you look for those subtle cues in a conversation. Baby Pips says that there are specific signals within the market that can give you a heads up.
So we're talking about those telltale signs.
Right.
That scream run for the hills.
Or proceed with caution, at least.
Or maybe just proceed with caution.
Yeah.
Right? Things like weakening volume.
Yes.
Changes in momentum. And even those gut feelings that everyone seems to be sharing.
Yeah.
We call that market sentiment.
Yeah.
Okay, let's unpack these one by one.
Okay.
Let's start with weakening volume.
Oh, right.
What's the significance of that?
So volume is all about participation.
Okay.
It's the number of shares or contracts that are changing hands. And if a stock's price is dropping, but the volume is drying up, it might not be as bad as it looks.
The fewer people are actually selling.
Right.
Even though the price is going down.
Yeah.
Interesting. Why would that be?
Well, it could be a sign that the big players, the institutional investors who really move markets.
The ones with the big money?
The ones with the big money, they aren't convinced this is a true reversal. They might be sitting on the sidelines waiting to see how things play out.
So it's like a poker game.
Yeah, exactly.
The pros are holding their cards close to their chest, waiting for a better hand.
Yeah, they're waiting to see what's going to happen before they make their move.
Okay, got it.
Yeah.
So low volume might actually be a good sign in some cases.
It could do.
But what if the volume is high and the price is dropping?
Right.
That sounds more worrisome.
Yeah, that's when you want to pay extra close attention to momentum.
Okay.
Think of momentum as the force behind a price trend.
Okay, so like a snowball rolling down a hill?
Yes.
It can either gain momentum and get bigger,
right,
or it can start to lose steam.
Perfect analogy.
Okay.
Just like you wouldn't want to be in the path of a runaway snowball. You don't want to be holding a stock when its momentum is fading fast.
So how do we spot that fading momentum in real life? What should we be looking for?
Yeah, like how do we actually see that in the charts and graphs?
Exactly.
Well, one way to gauge momentum is to look at the size of the price swings.
Okay.
If a stock has been making like big, consistent gains, right? And those gains start getting smaller and smaller, that's a sign that the upward momentum is waning.
So like a car running out of gas.
Yes.
It might still be moving forward.
Right.
But it's losing its oomph.
Exactly. You want to see those price swings staying strong and healthy if they start to fizzle out.
Yeah.
It could be a sign that a reversal is brewing.
Okay, fading price swings.
Yeah.
Got it. But how do we factor in market sentiment? It feels almost impossible to measure something as fuzzy as the mood of the market.
Yeah, that one's definitely more of an art than a science.
Right.
Think of it like reading the room at a party. Yeah. You can sense the overall vibe, right?
Yeah.
Are people excited and energized? Or are they starting to get like bored and restless?
Yeah, you can kind of feel the energy shifting.
Right.
Even if you can't pinpoint exactly why.
Exactly.
Yeah.
It's the same with the market.
Interesting.
You can pick up on that collective mood by paying attention to like news headlines, analyst opinions, and even social media chatter.
Oh, wow. So you're saying like if Twitter is blowing up
Yeah.
about a particular stock, that might be a sign.
Could be.
Interesting.
Yeah.
So if everyone is suddenly doom and gloom about a particular stock or the market as a whole,
Right.
that's a red flag.
It can be. A sudden shift in sentiment from positive to negative can definitely contribute to a market reversal. It's like a domino effect.
Yeah.
One worry leads to another, and suddenly everyone's heading for the exits.
Makes sense.
Yeah.
It's all about connecting the dots between those individual signals and the overall mood of the market.
Right.
Now we've covered weakening volume, changes in momentum,
Yep.
and shifts in market sentiment.
Yes.
But how do we actually use these signals
Right.
in real-world trading scenarios?
Yeah, that's where things get interesting.
Yeah.
It really depends on your individual trading style and risk tolerance.
Uh-huh.
Some people are comfortable riding out the volatility, while others prefer to play it safe.
Right, because everyone has a different definition of risk.
Exactly.
What might feel like a minor dip to one person
Right.
could be a major panic moment for someone else.
Exactly. But here's a general principle. The more signals you see aligning, the stronger the indication of a potential reversal.
Okay.
So if you see weakening volume and fading momentum and a shift in market sentiment, it might be time to reassess your position.
So it's like a 3 strikes you're out kind of situation.
Yeah.
3 warning signs, and it's time to at least consider heading for the sidelines.
Exactly. Now, this doesn't mean you should like panic and sell everything at the first sign of trouble, but it does mean you should be paying attention, adjusting your strategy, and potentially tightening up your risk management.
Speaking of risk management,
Yeah.
let's circle back to those stop-loss points we mentioned earlier. Remind us again how those work
Yeah.
and why they're so important, especially when navigating market reversals. They're like our financial safety nets, right?
Exactly. A stop-loss order is essentially an instruction you give your broker to automatically sell a stock or a currency if it drops to a certain price.
So it's like setting a limit
Yeah,
on how much you're willing to lose on a particular investment.
precisely. Think of it as like your emergency brake.
Okay.
If the market starts heading downhill faster than you're comfortable with, your stop loss kicks in and gets you out of the trade.
That makes a lot of sense.
Yeah.
It's like having a built-in protection mechanism
Right.
to limit those potential losses.
Exactly. And stop losses are especially crucial when dealing with market reversals because things can move quickly and unexpectedly.
But here's the question.
Yeah.
How do you decide where to set that stop loss?
Right.
It seems like a delicate balance.
It is.
You don't want to set it too tight and get stopped out of a winning trade prematurely.
Right.
But you also don't want to set it too loose and risk major losses.
Exactly. That's the art of risk management. It's a decision that should be based on a combination of factors, including your risk tolerance, the volatility of the market, and the specific signals that you're seeing.
So if we're seeing those warning signs that we've been talking about, weakening volume, fading momentum, negative sentiment,
Right.
we might want to consider tightening up our stop loss to protect ourselves.
Exactly. It's all about adjusting your strategy based on the changing conditions of the market.
Right.
And remember, even with stop losses in place, there's always an element of risk. The market can be unpredictable.
Right.
And sometimes those big waves can catch us off guard.
That's why it's so important to have a well-defined plan
Yes.
and to stick to it,
Yep.
even when things get choppy.
Absolutely.
But hey, let's not forget about the human element here.
Right.
We're not robots.
No.
And emotions can definitely play a role in our trading decisions.
Oh, absolutely. Fear and greed are powerful forces, and it's important to be aware of how they can influence our judgment. That's why Baby Pips emphasizes the importance of connecting with other traders and learning from their experiences.
Yeah, it's like having a support group for the ups and downs of the market.
Yeah, exactly.
It's good to know we're not alone in this roller coaster ride.
Absolutely not.
So as we wrap up this deep dive, what's the key takeaway you want our listeners to walk away with?
I think the most important message is this. Market reversals are inevitable, but they don't have to be catastrophic. By understanding the signals, managing our risk, and staying informed, we can navigate these tricky waters with more confidence and resilience.
Couldn't agree more. It's all about being prepared, staying adaptable, and never stop learning. And that's what Finance Insider's all about, empowering you to make smart financial decisions.
Yeah, absolutely.
So keep learning, keep asking questions, and most importantly, keep those portfolios thriving.
That's right.
See you next time on Finance Insider.